Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, March 31st, 2009. Well, the markets are trading higher today after a big sell-off yesterday, and we'll talk about the intraday chart, we'll talk about the 60-minute chart as well, but I really want to start out by focusing on what's driving the markets today. What are we seeing? Are we seeing end-of-quarter buying, maybe putting some financials in the portfolios of these funds towards the end of the quarter now, as today is the last day of that quarter? That is a possibility, and I think it shouldn't be discounted. I think there's a lot of funds out there that missed a lot of this run-up after being short for most of the quarter, and they want to put some of these financials like JP Morgan and Goldman Sachs in their portfolios after they've had 100% runs of late. So I think that's something to watch. But for the most part, you're basically recapturing about half of what was lost yesterday, folks. The Dow is up about 128 points, the Nasdaq up about 34, and the S&P up about 13.5. Really just under about 2% or so around the board here on the indexes. Now, what you are seeing on this current chart I have up, it's the SPY, the Spiders Intraday 10-minute, is the market attempting to break out of a key range here. Now, how did I get this range? Number one, you're taking the high, which is the gap window from yesterday, and drawing that line straight across. And you can see how it hammered on it a long time here, pulled back, then made an attempt and broke out above it. But you're running into this secondary resistance point right up here. And I want to show you where I get this one, because this is a big one. And I'm going to do that by scanning back and just follow that line as it slopes lower. And there you see it meeting on the low of the 25th, and then continue lower, all the way to the 23rd. So I'm taking the low on the gap. See this gap on the 23rd? Taking that point, drawing that line all the way over here to the low on the 25th. And if you keep that line and just continue to draw it straight out, it basically comes into play right here. Right here, this line right up on the top. And that's a major level in this market. Right now, the market is pushing above it. If the market clears this level, and this level again is approximately let's get a quote on that, around 80, just over 80, $80.15, $80.10, right around this level here. If you clear this level and close above, the market on a technical basis should continue to make a move up into this downsloping trend line. I'll just show you quickly where I get that downsloping trend line. Really what you're doing here, folks, is just drawing lines from the high here to the open. All right, and you just continue to draw that right across. And what's really interesting is that you get a secondary level right here on the low candle of the next day, and then actually coinciding with the lows here on the 27th on that chart. Very fascinating, guys, and just continue to draw that all the way down, and sure enough, that's how you get this next trend line. And this trend line currently is sitting right around $80.50. So if you get a move into that level, look for resistance there for a good solid pullback. Now, we're still fighting this one. So let's just keep that in mind, is that you haven't technically broken out of this line here at the just over $80, $80.10 level. You still have not technically broken, although the way it's looking right now is we will close above it. But remember what you need. You need confirmation. Too many amateur traders don't get confirmation, then they wonder why they get whipped out of a trade. That's why. You need confirmation of this move. Right now it looks very solid as we are pushing above this major resistance line. But again, let's get confirmation on the next candle. All right, now should this up here at 80.50, current level at 80.50, but remember it will slope down over the coming hours as it is a downsloping trend line. Should that trend line get broken to the upside, you're then looking for a move right into gap fill at approximately 81, right around 81.50, 81.25, somewhere in that low to mid 81 range. So actually, break of this would be a nice possible upside move in this market. Okay, so now let's talk about the downside. Should we fail here, and we'll know in a little while, or should later today we fail and come back down, you have this major support line. These are major lines. This one from this point right here, and this lower one that's curving up. Both are major support lines if we close above it. So you'd watch for good support if we trade up here on the way back down. In addition, you have the 20 moving average sloping higher. Now this is a beautiful little slope up. It's going to meet these two lines and form an even better support line. So right now you have to have a positive bias in this market, guys. We have light volume today, extremely light volume. We had a big down day yesterday. What does that mean? Generally it means you'll get a little bit of a bounce back effect, especially if there's light volume out there. Light volume dictates that you generally will float higher. That's exactly what we're seeing today. We're seeing about a 50% retrace of the entire move from yesterday. Here, as you can see, we've entered into gap window. We've broken gap window right now. Now we'll see if we confirm that break, which again ultimately could yield a move all the way up to gap fill on this chart. on the SPY intraday. Very, very fascinating chart right now as we are continuing to move up here and trade higher. Now on the downside, should you break this area right here, you'd look for this lower double bottom area from the day, and this level would be right around that 79.10 to 79 level on the downside, folks. But again, I just want to show you a couple things. This trend line, notice this moved down into this level, and this is where exactly we went to at the lows. You got to know your key levels, all right? Scan back and see where you got it from. This is where you get it from. You take this low on the 25th, you draw it exactly straight across, and you're going to come in to play with yesterday's key level, which was right here on the pullback, as you got to bounce there, and then look at the lows of the day today. So you have to know your trend line analysis. Trend line analysis is number one in my book. Price pattern and time are right there as well. Those are the only tools I really use as a day trader, as a swing trader, as an investor, folks. Whether I'm holding something 5 seconds, or 5 years, or 5 months, or 5 weeks, or 5 days, I'm using these techniques, and that's all I'm using, folks, because that's all you need. Stochastics, MACD, it's all junk, to be honest with you. I do not follow it. Everyone knows it. When everyone knows something, it doesn't work. That's why the contrarian on Wall Street works so well. You have to go to things that are more unique, more solid, more mathematical in the way that not a lot of people will use them. Again, that's why a lot of times you see pierces of moving averages, because everyone's looking there, and so they're going to take it through a moving average before hitting a trend line, and that's exactly what happens. So if you are interested in learning more about this and in getting our expert guidance, and you guys can see how accurate it is as we're starting to make a move to this level now on the intraday, go sign up for the research center at inthemoneystocks.com and our website. It's fascinating. We give premium guidance, the best guidance on Wall Street, in my opinion, that you'll ever get. In addition, we give guidance and education. Education is number one, guys. We're here to teach you how to fish, not give you a fish. And that's the difference there. We're not just here to call things out. We want to tell you behind the scenes what we're calculating, how we're doing it, how we're getting things, and that's going to make you a better trader so you can go off and fly on your own at some point in the future. All right? Now, again, let's go to the 60-minute chart. Let's talk about this market, because this market's getting a nice move. But all of a sudden, I'm seeing a major resistance level coming into play on this 60-minute. All right? And you guys can probably see this very, very clearly. Good resistance coming into play here, folks. And this is something you have to watch. See this 20 moving average? You're now piercing the 20 or touching the 20 on this SPY, and this could mean there's a shorting opportunity for a good scalp to the downside, maybe back to about $80. All right, there's a small chance we go to 80.50, and if I had to choreograph this market, that's exactly what I would do. I'm going to flip back to the 10-minute. I would say there's a decent probability we move up right close to this resistance line, which will be piercing the 60-minute chart right here, and ultimately then you pull back to about $80 on the spiders. And we'll just see. We'll play it out. You know what? That's me just guessing at what's going on, but you are beginning to come into a resistance level here on the spiders, and this does dictate that as we close in, and we're only about 25 cents on the spiders away from that next resistance line, as we get close to that and you're piercing this 20, more than likely you will see some resistance and maybe a pullback consolidation on the 60-minute chart pattern. Alrighty? Very, very interesting chart. I'm glad I was able to look at this with you guys, because this is definitely telling me that. The other thing you have to keep in mind, folks, is that we're not out of the woods here. I see a little bit of a pseudo-M pattern here on the on the 60-minute chart. 60-minute chart with a possible A in formation. We all know it, or at least we should know by now, that's a very bearish pattern, and we'll have to see if that plays out in the coming days. It won't play out for probably today, at least maybe it'll start later today, but more than anything, I would guess that would play out later this week, and we'll have to continue to update you every day in the intraday video. So fascinating possibility of an M pattern here, folks. We're going to watch that very, very carefully. And I just want to talk a little bit about what else this market's doing. Remember what's going on, guys. You have a good probability that the mark-to-market accounting will be changed slightly later this week. And I do believe the market may be floating up on that. And that's something you have to understand. And we're going to go over what that really means. Does it mean the market's going to dump out? Does it mean it's going to rally? Because it won't be what most of you will think, in my opinion. And I'm going to go over that to the premium subscribers tonight in the Research Center nightly video, which is about 25 to 30 minutes long in length. We really cover the nitty-gritty stuff in that video, which is part of the Research Center, along with the daily market report, the Pro Trader watch list, technical tactic, you name it, it's in there, hidden gems, and so forth. Alrighty, guys, that's about enough for today. Keep an eye on this pattern, guys. Good resistance coming into play on the spiders here. And again, on the 10-minute, you're getting up to there as well. So watch this very closely. We'll talk to you tomorrow. Take care.